What's good, guys? What's good? What's good? What's good? All right, so I called the EU, right? I called the EU. Y'all, pardon my whispering, because I was at home and I have three young babies at the house, my little girls, and I was trying to keep my voice low, so I was whispering in my last two videos. But I'm at the office now. I'm in my office space, and we can talk. We can talk that talk now. We can talk trading. So look, I had called this EU trade, right, on a 15-minute entry model, right? Let me show y'all what was going on, right? So everybody can, let's just go over. See, I feel like in trading, right, a lot of times when I've been watching YouTube and when I was watching, I be seeing traders on YouTube, I don't see people giving you the raw, uncut, live trading where you can see people going in drawdown, where you can see, you know what I'm saying? Like I don't see that live, raw, that uncut trading. So I wanted you guys to see me before the market. When I place a position, I want you to see me if I'm in red, if I'm going in drawdown, and I want you to see how I respond and how I move while I'm in drawdown. You know what I'm saying? Drawdown meaning that you're in the negative. Your account is in the negative, meaning that you're losing money. When you're in the blue, obviously you're making money. But I want people to see when you're in the red and how to respond while you're in the red. Okay, let's get to work. This is EU, right? This is EU. All right. So on the weekly time frame, I'm trying to explain. I'm going to explain to you why I took the trade that I took. You know what I'm saying, why I entered the way I entered, right? On the weekly time frame, this is the weekly. This is the weekly on Euro USD. We see that this major break happened, right? This is a huge, monstrous break on EU, right? The last strong volume, the last strong accumulation area was this area here. I have it highlighted for you. This is the weekly area. This is the weekly range here, right? So before the weekly gave us, after this weekly gave us the major break, right? This is the last major break on the weekly time frame, right? Let me explain I'm trying to explain to y'all why I did what I did. This is the last major break, right? So right here we have this drop that caused the break. The market pulls up, creates a base, drop. This is your standard demand to supply, right? So this base I marked up as a weekly base, meaning that this is an area where the market could potentially give us a reaction from to continue to sell. A lot of times you see this happening on a lower time frame, but anything that can happen on a lower time frame can actually happen on a higher time frame with the more with the stronger push. You know what I'm saying? So look, we have this break happening. We have the drop, base drop. I marked this up before the market even got there. Actually, guys, I actually marked this up way before the market got there. But we end up getting the market to come and touch this base and react from the base, right? So from that zone that I marked up, we drop down to the daily. This is a multi-time frame analysis. We drop down to the daily. What do we see happening at the daily? At the daily, the market provides a choke. At the daily, the market provides a choke for us. So if the weekly is in a bearish zone, the daily give us a bearish choke. We're looking to set up for a possible sell, right? It's just that simple. The two larger time frames are giving off bearish already. So we go to the 4-hour time frame, right? We're dropping down in the time frames from the weekly to the daily to the 4-hour to the 1-hour. We're at the 4-hour now. Let's see what's happening on the 4-hour. On a 4-hour time frame, guys, this is what we see happening, right? We seen that major choke, which was obviously that daily break, right? This is the highest volume area out of this entire zone. This is the volume node. This orange bar represents the volume within this area, right? So let me give it to you so you'll see firsthand why I marked up this trade and did it the way I done it and done it the way I done it, okay? This is the volume coming out of this area, right? Make sure. Bam. Okay, so this is how I done it. When you just do the range, right? When you just do the range of this consolidation, just the range of the consolidation, you see the higher volume is up here, right? The higher volume is up here. But if you do from the high to the low, this is the volume here. So anywhere within this range, these two areas is volume, right? Okay, let's keep working. Let's keep working. The market is also at a 618 area. Hold on, guys. I'm looking at the chart and trying to speak. I gotta get something handheld. I gotta get something that I can prop it up so I can work a little bit more efficiently. But anyway, I see that 618. We have a 618 zone right here with the volume, right? All looking well. The market chokes below these areas, pushes up into this zone. Let's go to the 1 hour. 4 hours looking good. Let's go to the 1 hour. The 1 hour, we have a consolidation happening, but the reason why I took the trade is on the 15-minute. This is why I took the trade, guys.
This is a reminder.
This is why I took the trade.
Wants to win, the body will follow.
Before this push happened right here, right? The market gave us a 15-minute flip, right? We have this consolidation happening right here. The market pushes up into the zone, giving us this breaker structure here to the high. Then the market sweeps down to the low, giving a breaker structure to the low. This is what you call a flip model. This is what you call a flip model, and that's indicating that the market could potentially be reversing from this zone, okay? So when the flip happened, the market begins to consolidate, which is inducement, right? So once the inducement happened, we have zones that we have to pay attention to. We have to have the zone, which is the liquidity block. We have the shoulder right here, which is the Quasimodo. This is the quasi area. So the market could come down, come up, retouch this quasi, then sell, or come all the way up to the high. At the time, guys, we was in a minor area of drawdown. The market was at the high, and at the high of the move. The reason why I held the trade, right? At the high of the move, we had an extreme divergence happen on the Awesome Oscillator. We had extreme divergence happening on the Awesome Oscillator. Mind you, this peak haven't even happened yet. So once I seen this market giving a strong divergence after the flip had already occurred, I was saying to myself, okay, this could be potentially a stop hunt happening. And if a stop hunt does happen, it tends to do a 127 stop hunt. It tends to stop hunt around the 127, right? I want y'all to pay attention to this. If you get a flip in the zone that you're looking at, and the market comes up to the zone, to the high of the zone that you're looking at, and you get a divergence reading, that is a strong indication that the market could potentially stop hunt. That is a strong indication that the market could potentially stop hunt. And the areas that the market likes to stop hunt is typically the 127 area. So I was telling you that, okay, the market could be stop hunting. It could be coming up to this 127 area. It could be coming up to this 127 area. But if the market comes up to the 1618, I'm going to manually shut out of this trade because I'm watching this trade in real time. I'm going to manually close this trade if it comes up to the 1618. So I held the trade at the 127, and we actually did get a strong reaction out of that 127 area, indicating that this was most likely a stop hunt, and the market should break this low, retest, and continue to sell. All right. The ideal entry for this move would have been this 127 zone. But when you're not seeing, like, you don't know what's going to happen until it happened, right? I seen the flip. I seen the flip happen. I was watching the flip, and I was like, I'm entering the flip. You know what I'm saying? At the time, this market didn't even do that yet. At the time, hold on, what happened to what's going on? This market is glitching. Trading view glitching a little bit. Might be the storm. But anyway, guys, you have to trade with proper risk management. I am forecasting that the market is going to break this low and continue to sell. But there's a saying, anything that can happen will happen. So you have to be mindful that this market could actually just blow up and keep continuing to the upside. The markets has been sketchy. There's a lot going on with the markets, a lot going on with the news. So you just have to be mindful that it could actually go crazy, go berserk. and knock you out of this trade. But I am anticipating a sell. I'm in a sell position. I'm still holding the sell, and we'll see what happens from here. We'll see what happens from here. If the market comes back to this high right here, I will manually exit the trade most likely. If it comes back to the high, I will manually exit the trade. The market should be ready to sell off. And on a 5-minute time frame, it look like we already got a drop-based drop happening here, which we do. We got a drop-based drop. And as I was telling y'all, this is one of those supply to demand, demand to supply type of patterns that happen. So if the market does push up, it could likely react from this small accumulation on a 5-minute time frame to continue to sell down. But we'll see. It could just push down, but if it does push up, it could be reacting from this area and continue to sell down. But if the market comes back up to this high, I'm likely going to close out. But I am monitoring this trade in real time. So far, we are back in profit from the red. We're back in profit, and we'll see what happens, guys. But you have to learn to trust your analysis, and the more you know about the market, your response is a little bit better. But always trade with proper risk management. Always pay attention to what's happening in real time with the market. Trade what you see and not what you feel. Trade what you see and not what you feel. Don't go by your gut feeling. Trade what you actually see being printed in the market. Trade the price. You know what I'm saying? Trade the price. And the price was indicating to me that the market could still potentially sell. So I was comfortable with holding the trade and drawdown. This is a 1 to 3 now. Once the market break this low, I'll readjust my risk, bring my risk back to break even so that I can protect myself, because protecting your equity is the #1 rule of the game to stay in the game. So we're waiting to see some breaks of structure so that we can secure ourselves in this trade. But for now, we're still a little vulnerable. We're still in a vulnerable position. We could still suffer a loss. But once the market start breaking down, we'll be better off reducing our risk and securing our equity. So guys, stay blessed, and I just wanted y'all to see this trade in real time, how it looks in real time, trading a live account. A lot of people be trying not to show you the messiness of trading. They be trying not to show you when you're in the negative, and you know what I'm saying? Like, they like to show you clean trades, clean setups. But I like you to. That's the reason why I post what I'm actually doing in real time, man. So you can see my faults. I want you to see. I want to be transparent. I'm not earning nothing from this. My only thing that I'm wishing to gain from this is to bring awareness to this skill set, and hopefully that this skill set can it would spark somebody's attention, and they will want to learn the skill set so they can be profitable, man. Because this is the age of digital entrepreneurship. Like, people are earning off of these major platforms, monetizing these major platforms, changing their lives. I'm not earning nothing from this platform, but I'm earning from day trading. You know what I'm saying? I'm earning a living through day trading. I'm earning a bag through day trading, and I'm trying to teach you this skill set. I'm not trying to entertain nobody through social media. I'm not trying to take nobody attention. I'm only trying to bring attention to this skill, which is trading the foreign exchange market. Trading, period, because you can trade any asset columns, whether it's gold, commodities, indices, stocks, whatever. This is foreign exchange, meaning currency specifically, but this is the type of skill set you will want to have in your tool belt in this day and age of digital entrepreneurship, because digital entrepreneurship is the leading field at the moment. So y'all guys, stay tuned, stay safe, and keep up with it, because it's free information and it's actually valuable, man. So if you're going to pass some time on doing something, whether it's strolling, pass some time on learning a skill set. If you're going to pass some time on learning a skill set, because then you'll be using your time wisely. Y'all stay safe and enjoy, and happy hunting in the market.